The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this Wednesday the 20th of May. Almost half a year has gone by. That's amazing. All right. So the Dow is at 18,312. S&P is down a point at 2126. The comp index is down 2 at 5067. Gold is up 3.5 at 12.10. Silver's up 11 cents at 17.19. You've got platinum up 5 at 1.155. You've got high-grade copper back in the 2.80s. Bonds are down a half a point. The TLT is at 116.71. Really, 118. Yeah, 118.71. I'd say to subscribers, it really has to hold this 118 area, 117, but really 118 is key. It starts to move down from here. We're looking at something a little bit different in terms of the Japanization of our bond yields, at least in the intermediate term, as we've had quite a while now of higher rates. They're still, I say higher, but they're higher from really historically low. So, but the fact is they are rising. And the weekly chart is still in leg C of the 30-year T bond, the 10-year T note, and the 5-year T note. So this is going to be a very interesting period as May comes to a conclusion. What happens in June? To rates, to a lot of things, actually. The dollar, the works. And I think the Fed today, what do they have to do? They don't have to do anything. Look, they've got their slightly higher yields. They've got the dollar coming back down. Yeah, the work's been done for them. They just have to talk about the weather. They could just talk about anything they want. They don't have to do anything. So thank you to Steve for a great 2 hours. And I must say that when I'm looking at the charts and with all the effort and the work that I've been putting in, the irony is doing nothing and just holding your portfolios has been a good strategy. My suspicion is that we're coming to the end of the road just in the short to intermediate term, that there should be slightly higher highs, not that much higher, but higher highs over going into next week, maybe the middle of the week. And then we've got to start being careful again. Now, does that mean we go back into the trading range? Does it mean we go all the way down to test the 17,500s in the Dow? What's the big deal? 17,500s, 800 points. 800 points is not, it's what, 7% or something like that? It's nothing. But I think it would be very important for us to be in the, certainly in the mode, the atmosphere of correction, because we've been in a correction, but going to new highs, as far as the media is concerned, means that on the news you can say the Dow's at an all-time high, the S&P's at an all-time high. It's really important because it's part of the morale, part of the ambiance that certainly has been the product of the Fed wanting to see portfolios rise and for the general public to feel much healthier and much better about their healthier portfolios, and certainly they've got that. So let's get to the nitty-gritties here. The E-mini is trading at 2124.75. What you can see here, I'm going to expand this. If you're looking at my work, this is the 120-minute chart. You see there was a beautiful up channel, and it went to the dashed line resistance area right at that 2134 level. Just the other day, on the 19th, the other day meaning 2 days ago. And now it's pulled back, and it's got this cup-shaped formation. And my suspicion is that we're going to have just a little bit of a breather here, maybe for the rest of the day, maybe into tomorrow, or maybe part of it has already been done. Depends on what the Fed influence is. But the stochastic is at 92%. The MACD is good in the daily chart. The 120-minute chart has pulled back significantly from up in the 90s in the stochastic to down to below 20, and right now it's at 18.90, trying to attempt a reversal to the upside here after a time-consuming but not a price-consuming consolidation. Now let's get rid of this. Go through a couple of things here. I was asked a number of questions. One is the S&P weekly chart. The weekly chart has gone to an E, and the question was, Basil, in your work, I know that you talk about the speed with which you go from a D to an E in the chart formations. How does that impact either the monthly, where you've gone E/A, F/B, G/C, almost not every, but almost every other month, maybe 2 months at worst, and just with modestly higher highs? How does that impact everything? All I can say is, very often when you've set that consolidation, that kind of coiled spring formation, it looks like it wants to break out, but sometimes it needs yet another period of just modest highs and modest pullbacks to form that spring-like move. In this case, it would be to the upside. So let me just do one thing at a time. I'm calling this, in fact, I'm doing that right now, even though the Fed can come out and smash it. But at least at this point, there's just a lot of evidence to say that this is probably leg B, maybe peak B today, with a brand new buy signal to buy mode, and that if it holds through the day around about this level or goes a little bit higher, it definitely will look like a buy mode technically, and that would suggest it's going to go to a C and a D and at least a D, but it could even go to an E, and then we should be, once again, on looking at the short side, or at least studying the short side. And in the weekly chart, you've got your modest breakout from this cup formation at peak C1, C2, modest peak D at 21.2593 in the S&P cash index, and that's the monthly, and now you started leg E. And when you go to that's the weekly, and then when you go to the monthly, you've got this incredible thing that's going on right now. May has seen a new all-time high. That means that the match, just as with the Dow, the match that went to an exact monthly time reversal has been exceeded by 1 month. That's this month. So last month, the month of April, 2125.92 was the high. Because we have squeaked to a modestly, up until this point, higher high by just a couple of points, that says that G/C has moved to the right, and that you cannot get a leg D. There's not a peak D, but a leg D until July. If the whole of June is lower than whatever the high is in May, then you can expect that if July makes a new recovery high, that starts your leg D. Now, I don't want to get into the whole nitty-gritties of how many peak Ds you can get, and whether you get instant restarts and what can happen, all that right now, other than to suggest that there are contingencies here that are saying, as of this very moment, having gone even just modestly higher, it's suggesting a couple of things. And one is that the key level of 2106 in the weekly chart will be very important support, because if that's broken, you could get a test of 2051. By then it'll be a little bit lower, 2051 to 2047, 2051 to 2049, I should say. That would be the monthly key support if there is a sharp turn down in the coming weeks. So let's just get this out the way. That's the S&P. Let me just go quickly to the QQQ to show you something else. QQQs have really been struggling. And that's suggesting to me, even to get to the 111.17 level for a leg D in the weekly chart, is starting to look, whoops, hold on, got something coming up here called a sneeze. And the sneeze is done, and I learned exactly how to use my on-off switch. I hope that worked. Very good. So let's move on. We're going to the QQQ with the cup formation, and this cup formation is suggesting that at best we're going to do a little bit of a test here between 110.90. It's at 109.94. That's a whole point higher. Somewhere between there and a maximum of 111.35, and then I think we got to be ready for some kind of consolidation in the Qs. That's just the way I'm looking at it right now. We have no position. This is for me like a little bit of benchmarking, what I'd be looking at. And the downside says any break in the next 3 weeks of 109 support would quickly take this down to the 108.30 to 107.70 area. All right, let's move on quickly. We want to do the IWM. IWM is lagging badly. Now, this was a leader. Now it's not a leader anymore, and it's suggesting that it's in leg C right here today, even though it's pulling back at 124.80, down 8 cents. It did go to leg C. It's really struggling, and that's another reason why I think that this is just a little bit of a coda to the last move to the downside. Now there's a little bit of unfinished business to the upside, which is being completed, and by next week we should start to see whether or not it's upside or downside, and my suspicion that I'll start to look once again more at the downside than the upside. Need to do this. I want to go to gold. Look at this. Gold is down. It's up $3 at 330. It's at 1210 right now. Made a peak D up against that 200 period exponential moving average resistance. Looks to me like gold, it's just going to be consolidating here, going sideways. What's really important is that if you look at this on a longer term basis, even though I'm anticipating lower prices in gold, looking out, the sideways arch formation is not yet completed. And I'll only be able to say it's completed if the continuous contract takes out 1168 as key support. That'll say to me, oh, man, you're not even going to be able to rally for quite a while. But at this particular point, it's still viable to have these arch formations form within a trading band. And that would imply very quickly that if 1218 is taken out, you'll get a retest of the 200 period moving average of 1224. So we're watching parameters here very, very closely, because at 1210, if there's a break under 1190, no, sorry, if there's a break under 1202 to 1198, that's support. Then you will go down towards the lower end of this rectangle trading range. I wanted to do that. I also wanted to do copper. Look at this. Copper, where did it go? Copper, I'll say it again. Let's go to copper. See, copper made a peak C1, C2, C3. I don't want to get into the technicals of it other than to say in the Chapman methodology, you can just miss making it leg D if all the other criteria suggest that it was just a fractional move to the upside, but the technicals were pulling it back. That means you can keep it as a phantom peak C1, C2. In this case, it's also C3. Now it's pulling back under the 200 period moving average. That's another reason why over the next week I'm going to become more cautious. So, Basil Chapman, we haven't looked at the dollar. I'll do that as we're going to the break. Basil Chapman, Tiger Technicians Hour. Hey, what a great day to take calls at 877-927-6648. I'll be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So, folks, we're looking at the dollar. The dollar's bumping into resistance if you use this Chapman Wave methodology technique that I've got over here. These technical tools, you'll see 96.20 is the resistance. The high today is 95.84. But what's really important about this is if you're looking at the weekly chart, see the little rectangle box that I had drawn in a while back? It held that support and it's bouncing back and it's stopping right at the is that 96? No, that can't be. I'm just trying to get the 9-period exponential moving average, the actual price. Can't be 95. Oh, I'll do it right here. 95.65, and right now the dollar index is at 95.50. So right there you can see that there's resistance. This is going to be a very important week. Next week I think is going to be quite important after the Memorial Day weekend. A whole bunch of things. You've got the dollar, you've got bonds, you at really key levels. You've got the TYX, TYX. Got to put in a Y if you say Y. There it is. TYX and leg C in the weekly could be a peak D if this week you pop above 30.99 to 31. But you've made a little peak F top here, just retesting. It says to me that the yields could and do some testing in this area. It's at 30.52 to under 29.50. I would suggest that it's going to test the 28.90, 28.61 area. That'll help the TLT, but we'll have to see how this pans out. So it's key. Now, the question I had was, Paul asks about the Dow chart. What is the question? The question is, hey, make it a great holiday, a good tennis weather ahead. Yeah, unfortunately, this weekend I will not be able to play tennis because I'll be doing other things. But this is the chart that he's looking at for the double top. So the question is, can you talk about the double top showing in the Dow average? What's the significance of this? Well, at this particular point, yeah, you could say double top-ish because we've gone a little bit above it. Now, for subscribers, what I had said is it depends on how the Dow closes in the 18,300s if it gets there, and how it does that over a period of a week, maybe a little bit more than a week. So to me, I'm not looking at a double top yet. I'm looking at the potential for a double top, and let me show you exactly what I'm talking about. INDU. That cup formation absolutely has a suggestion that there could be a double top in play. But at the same time, the MACD is really starting to show some kind of the torque from the stochastic, which is now at 89% in the weekly chart, has really impacted positively the MACD. And that means first and second gears have to be handed over to the MACD to continue the momentum, which makes price very important. Why? Because if the Dow closes under 18,170 in the next 2-3 days, that's going to say, yes, Paul, good eye, because that essentially will say, watch out for the potential double top right now. My thinking here is there's just enough energy to push us slightly higher. Got to have patience here, and we'll see how that pans out. So that's number one. And the significance is that if the weekly chart makes a turnaround, 18,097 is the 9-period exponential moving average. And why is that important? A close below 18,000 would suggest that we're going to make another U. These patterns repeat over and over. They repeat in different time frames and different categories. But once they set themselves in place, I could show you a whole bunch of charts that look like the Dow, like this. Wait, no, it's this one here. That looks like this particular chart pattern right here. See the U that turns into a double U, like a soft W formation, going to just above the previous high. In this case, it was lower lows and lower highs. Now all of a sudden you're looking at slightly higher highs and slightly lows. Look at the pink dashed line resistance there. Just a whole bunch of things that say in this area there should be a lot of resistance. So we'll see how that pans out, but I gave you the numbers to look at, and that's even more important. Next question was Sarepta Pharmaceuticals. What does Ern ask? Yeah, big question mark. SRPT. You know, when these things come about, they are spectacular. And if you're not in it at the time of the breakout, you're just looking and say, oh, no. And this, in fact, was one that was on my list to buy. But when it made that little bounce to peak A and then B, the stochastic was good. And I wanted to see how that doji would react. Would it be a repellent to come back into the range on Sarepta Therapeutics? Would it pull back and just make yet another part of the channel? Or is this a really good breakout? Well, by the time I figured it out, you got the news last night, and Sarepta's up $7.88 at $24.25, up 48%. So what do you do now? I'll talk about that when we get back. Basil Chapman, Tiger Technicians Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So, Sarepta Pharmaceuticals, let's just get back to that. So this is the patent that I always talk about. It's I even like to, I haven't done it for a while, but in my master classes, I spent some time with these gaps to the upside. And what I discuss very simply is think of it like a flag formation, that within this context of a spike to the upside, you go to a shorter time frame. In this case, I'm going to the 120-minute chart. And the 120-minute chart is suggesting very strongly that because the second bar so far of the day, that is, a second 120-minute bar, has not gone way below the body of the candle to start testing the lower part of the leg. That's the wick, the shadow. What we want to do is to look at this as if to say there could be a pullback in the next, between now and Thursday afternoon, maybe even Friday morning. And then there should be a move to the upside that takes the form of a mini inside buy signal, that buy mode. I'd even say maybe you can go to a 10-minute or a 30-minute chart. And within that, you should see a little peak A, a B, a C, and then eventually a D gets very close to the high of the day. The high is 20, where did it go? High is 24.99, low is 21.81. It opened at 23.28. So it's quite a bit lower. Anybody who was covering is saying, oh, geez, I could have saved $2. But what's really important here is the way it holds up. And because I'm calling this leg C, and it's really must be great news, I would not be surprised if it's going to make a D. So, Ernie, I'm going to suggest small position, You could try for a small position. If I can just quickly find this chart here, I want to go to the preferably 30-minute. 30-minute, 15-second. No, we won't do a 15-second. We'll go to the 30-minute. I love that 15-second. Where did it go? Right there. So we'll take that and we'll put in Sarepta SRPT. And all of a sudden, we've got ourselves something very, very interesting. It's at 24.52. Ernie, if it pulls back to 24.10 to 23.90, I'm going to make the suggestion. I know that you follow this real closely, these things. You can start a small position. And that small position, what you want to see, it go above, into the 25s. The moment it goes into 25s, normally I would say that if this is leg C and it goes into 25s, that's good because you still want to pull back and then a leg D. But if it does that tomorrow, and that makes peak C, no, if it makes it tomorrow, it'll still be leg C. It has to be on Friday. If by Friday you've not taken Friday morning, you haven't taken out 24.99, but you've really held very nicely above 23.20, 23.20 to 23, then I'm going to suggest leg D. You could play leg D and see where it goes from there. Because what you would want to do is have your small position, fairly tight stop, and then as soon as it runs above what, if today's the peak or whatever the peak is, starts that new leg up, immediately put your stop a lot tighter in this part of your position and just let it go. Now, is that the way to play it? If this has got great news and in fact there's something going on and it's only leg B in the weekly chart, no. This is just a short-term trade to maybe get a good feel as to where the support that at 22 really has to hold, 21.90s I'd say. But this is really the issue. If you can see looking out a little bit. In this particular case, I think this momentum could continue a little while longer, and then you've got to be careful. And so I'm going to suggest that the position that you really like to look for, if the small position gets taken out, if the small position still looking great in the things at 26 and you're still in it, that's terrific. I don't know how you'd add at that point because it's, the bar that you're looking for is the bar of the week of the 17th of October at 24.95. Well, what's the high today? The high of today is already 24.99. So we've gone above it by 4 cents. So that says to me the next level is just 25.41, another 60 cents above that or so. So I at this particular point, I would prefer to see it pull back for whatever reason to between 22.20 and 21, I'd say 21.50. If it holds, and that 20.10 is the 200-period moving average, it doesn't even come close to that, but it just holds steady there for 5 out of 7 days, that'd be a really good sign if all of a sudden it starts to go 22.30, 22.50, 22.90, 24.10, 24.50, and then takes out whatever the high is on this bar. That'll be really good action. And that's the only way I could play it. So very short term, nibble, have a little bit of fun, see where it goes to. That's really not the big trade. It might turn out to be, but I suspect that the bigger trade is if you can get a pullback of 3 to 5 sessions and it's holding above that, let's just say 21.70. It's holding above 21.70, 3-point pullback of 12% pullback after such a huge move, and it's must hold. Don't get it on the first drop. It's got to drop and then make some kind of a basing level. Look at the 120-minute chart. Then I would start a different position. I start a position that says, if you keep rallying, I'm going to add to it. That's the only way I would do it. And also, I would start off with a little bit wider stop when you get in, but you don't even want to see it get close to that. All right, that's that. Then another question just came in right now. Wayne asks, can you look at Exxon? XOM, this is a very interesting stock. Dividend stock, a lot of people just have held and held and held and held because it's a dividend stock. And what I was recommending way back, months and months ago, was that there was a chance, based on the Chapman methodology, that there was a 2-bar reversal at 104.76 on the 104.61 in June of 2014, and then 104.76. Now, the 2-bar reversal usually has slightly lower second month This is the exact opposite. It's a slightly higher second month after that in the narrowness of the highs. But over the last year, I've done work on this. It works the same way. It's basically a 2-bar reversal, and that suggests that if the price starts to fall under the 9-period exponential moving average, you've got a change of trend, and that's exactly what happened. Look at the MACD, look at the stochastic. So I've got a left side, right side price time match, which came in exactly for the test in March of this year. But unfortunately, it's bounced and stopped at the 9 EMA. So when I'm looking at Exxon, it's so tough for people who want dividends. You have to go for the players that also have capital gains. And this was one of those. Now it's capital gain losses. No, it's capital losses, no more gains. And in fact, what's happening is I believe a lot of people are trapped. Look, if you want your 4%, maybe let's say it's 5%. You want your 5% and you bought in at 102 and it happens to be trading at 87, 13 points lower. Where's your 5%? You are down with your 5%, which you have to wait a whole year for. You are down 12%. So the total is from 104.76 down to the low that was made. And that's the reason why I say it's like people say, I'm not going to sell the stock because of tax implications. Let me tell you. I learned a long time ago. Sell the stock, take the tax implications, because sometimes you don't even have tax implications anymore, because while you're waiting for the tax implications for January to come around, the thing darn well slides 20%. So that's what happened here. It went down almost 20%, now 20%. So that's not even 12%. I said that's right, 20%. That's not even that. It's wow. At best, it's 16% you lost. And you made that little bit, that 4%. So please don't look at it that way. I would not be looking at Exxon right now. I keep looking at the Verizons, the telephone. I don't know. There's so much competition coming in for your telecommunications service. I would have to say to you, there are better looking stocks. But I am kind of nervous about the ones that are the traditional ones, the ones in the telecommunications. Believe me, when the deal comes through and I can start to get a really good, reliable, different communications, pay for my communications, I don't know if it'll ever happen, but much lower prices, instead of just grabbing something to get a lower price. For instance, I like to have a landline. I have 20-something trees around my house. I can get knocked out at any point. I need a landline, even if it's just if I need to call into my show because I can't get my other equipment up. I just need the landline. But it's just a waste of money for the number of times that I actually really need it for a power outage. So it depends on how you look at it. Most of the young people I know now don't have landlines. They have their cell phone, and that's it. So I'm looking at this and I'm saying, hey, same thing, dividend play. Verizon, 49.82. It could very easily drop to 44. There's your 5%. Bam, gone. So this is a difficult phase for me because I would love to look. There are a bunch of stocks that I would love to look at I'd love to look at them as for subscribers to say, hey, here's a nice dividend play. I don't want to have that kind of risk, 10, 12% down just for my lousy 4%. I don't like that. I want capital gain. And I want the dividend, and I have to look at things in a different light for that. So let's get off that topic and go back to Exxon. So now I don't know, Ern, if you no, this is Wayne. Wayne, if you're in this at all, if you're in Exxon, XOM, then my suggestion here is twofold. If you're in it, I would suggest to you, you see, to go all the way down to the 82.50, was it 82.68 low of the 13th of March? 5 points down from here, just to find out if it's going to hold support. I don't like that. So here's my suggestion. If you're asking me my opinion, I would say if you are long Exxon, if Exxon closes under 86 in the next 2-3 weeks, I'd even say in the next week, I would say to you, just lighten up a little bit on your core position. That's my recommendation. If in fact Exxon starts to move above 88. It's at 87.06, 88.30, and pulls back to 87.90, and then suddenly pops to 88.50. That's making a U-shaped formation. Now, I don't know if you're buying Exxon, I don't think you want to trade it. Now it's becoming more of a trading stock. It wasn't before. It was really just a long-term. Look at this monthly chart. It was just a long-term buy and hold. Yes, it had severe declines from 96 down to 55 from 2008 to 2010. Huge decline. But there was a little difference in my thinking. The difference was that the product that was Exxon Mobil was still viable. I'm looking at it and I'm saying, there's a glut. And if there is going to be an economic slowdown, if there is one unfolding as it stands, this could be a different situation. So you're asking the wrong guy here, because I'm looking at it. I should be looking at it as, where do I buy Exxon? It's always a buy. Where would I buy it again? And if I did that, I would then say the exact opposite. And I would say to you, I would be buying Exxon right here for the small position. I'd add another small position at 83. And that big test that I'm talking about, at 80, I'd buy another position at 84.50, and the big test of 82.68. If that holds, I'd add another position, because I would be expecting another huge move to the upside. I just don't see it right now for Exxon. So I'm going to suggest two things. One is, you got your core position. I don't want you to add to it, number one. Number two is, you got your core position. I personally would want you to take a little bit off if it closed under 86. I really hope that helps you, Wayne. And one of the reasons why I'm making a big deal about it, if you look at CVX, another one in the group that's been an outstanding winner, Chevron Core, there's an unusual peak G top. That's very unusual. But look at the H going to an M pattern. All of this is suggesting to me that maybe it's in a trading range, and you'd love a trading range if it just bounced between, it's at 105. If it bounced between 101 and 113, and it kept doing that all year, hey, there's nothing wrong with that, because the very next time it goes to 110, you're getting dividend and you're getting your premium capital gains. But boy, I'm just telling you that if these things start to break the lows, that's another story altogether. And that's what I think might be happening in these integrated oils. All right, so let's go to, then another question was, I'd spoken yesterday about, you remember C? Oh, I want you to do this. C is doing a retest. This is the corn continuous contract. Not looking good at this particular time. It makes the low that was made on the 5th of May at 355.5, really important to hold. But you remember, wheat was holding one, and I said wheat has a chance to try to bounce off the 9-period moving average of 502. It's doing that now. And if it can bounce back to the 518 to 522 area, then there's a real good chance, instead of peak C minus that it made previously, right on that 200-period simple moving average, this time it could go to that moving average of 553. Those are the parameters to watch. 518 is a plus and says, hey, I could keep moving to a leg D. 498, under 498 says, uh-oh, forget it. I'm back to my weekly failure mode. I'll be right back. Basil Chapman, Tiger Technicians Hour, Dow's down 21, S&P's down.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks, we're back. So we're back, and the Dow's down 24, S&P's down 3. What I wanted to do earlier in the day, and thank goodness I just got a reminder of it, Mike had just sent me saying Dow Jones Transportation's down 153 points, down $1.77. 1.77%. Thank you for reminding me that, because what I wanted to say is the reason why I'm slightly bullish at this particular point, just in certain sectors, and it's more to do with like the financial sector, is because and the Dow and the S&P, because I still don't think that this is a leg B in the Dow. I think it's more like a leg F. I think it's a leg B. I think there's just enough residual strength to go higher. But I'm not a Dow theorist, other than over the decades that I've listened to the story of the Dow theory, because sometimes it's fantastic, sometimes it isn't. But the concept is really great, that when you've got your whole transportation index, that would include the rails, the truckers, the airlines in sync, it's really good for the economy. I mean, what's wrong with that thinking, right? That's great, except for one thing. My concern the other day was the XAL was declining very, very sharply. I think I showed it. I'm almost sure I showed it yesterday. Well, what's really important about the ARCA Airline Index, XAL, trading at 96.69, down 4.31, down 4%. So, yeah, it's kind of connected with oil in a sense, but they are making, these guys, I mean, anybody who's flown lately, it's really difficult to get flights. And when you do that, you're packed like sardines. They've managed to squeeze every penny. Something's going on in this whole transportation area that is a little different to what we've seen in a long time. I have respect for that. So let me just say 3 things. One is the RTH, and we spoke about that last night. I think it was either yesterday or last night when I did Tom's show. The RTH is the Market Vectors Retail ETF. The XRT is the S&P XRT, is the S&P. Where did it disappear to? Why is it not there? XRT. Oh, there it is. The XRT, same thing. Both of them are down today. Very important. SPIDER S&P Retail ETF. That's one. Category 2, transportation to me is at least an indication to say not all the boats are headed in the direction, and that the supertanker is attempting to turn. It's had these isolated huge waves that keep creeping up to the shore, but we won't know whether the directional change is coming until we can see 2 things happen. One is the VIX index, and I keep talking about this, and believe me, it's becoming more and more important, which has been holding quite nicely, start to move into the 14s, hold in the 14s and not come back to the 12s or the 11s, but hold there with minimal upside movement in the market intraday and lousy closes, and all of a sudden bad news filters into the market. That to me will be the start of a change in trend. I'm anticipating it's going to happen. I thought it would happen before. Instead, we went sideways for 2.5 months in a rotational correction. Now what I'm looking at is I see less, just fewer and fewer leadership stocks. I don't like that. You cannot have the generals. Of course, today you don't even get the generals on the field. But you don't get the generals leading the troops if the troops are out there looking for, something else to do. And that's what's going on here. So I need to see leadership, and I need to see that leadership filter and expand, not contract. And that makes me a little nervous. So I do want to play the upside for just the next week. And then I think you've got to be real careful again. So that's my outlook. Oh, we've got Shiv looking at Vail. Let me just do this as we go to Larry Pesavento. I can't do it. I thought I'd do it. VALE. Yes, there it is. Be careful with Vail. If you're in it, be careful. It better hold 650, otherwise it's gone. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.